This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, August 26, 2026, and this is the New York pre-market. Now, let's get into it. Bitcoin is holding at 78,108, but the broader digital asset market is bleeding out, with total volume hitting 82.16 billion across nearly 19,000 active cryptocurrencies, while the Fear and Greed Index sits at a brutal 14 out of 100. The VIX is calm at 15.85, but crypto is pricing in a structural stress event driven by a 700% spike in Iranian capital outflows and a collapse in institutional futures demand. We are live at 9:21 ET on Wednesday, August 26, 2026. On the economic calendar today, the primary focus is on the 8:30 ET release of durable goods orders, followed immediately by the 10 o'clock ET GDP reading for the previous quarter. These macro prints will dictate the risk appetite for traditional equities, which in turn sets the tone for crypto liquidity. Apex, what is the single most critical data point to watch in these releases?
The durable goods orders print is the immediate trigger. We are operating in an environment where Bitcoin futures demand has fallen to 2024 lows, meaning institutional leverage is already compressed. If the durable goods data shows unexpected strength, the VIX could compress further while crypto gets punished for being the only asset class in extreme fear. We need to see if that traditional market complacency bleeds into digital assets, or if the decoupling widens.
Looking at the broader snapshot, the total market cap is contracting by 3.72% to 2.64 trillion. Bitcoin dominance is rising to 59.16%, signaling a flight to safety within the crypto asset class, even as Bitcoin itself is down 0.78% to 78,108. BNB is the only major asset in positive territory at 698.58, up 0.44%. Meanwhile, high beta assets are getting hammered. APT is down 5.46% to 0.5633, XRP is down 4.49% to 1.39, and XLM is down 4.43% to 0.1823. Pulse, walk us through the sentiment breakdown. This is not a flash crash. It is a sustained capitulation. The Fear and Greed Index is anchored at 14 out of 100, with a 7-day trend holding at a depressed 12. That 7-day average confirms the current extreme fear is entrenched, not an anomaly. We are seeing capital rotate out of high beta altcoins and into Bitcoin dominance, which has risen to 59.16%. But the 700% spike in Iranian crypto outflows following US-Israeli airstrikes is injecting unpredictable sell-side pressure. Retail and regional capital are fleeing, and the 82.16 billion in total volume is bleeding across nearly 19,000 assets. This is broad-based capitulation. Turning to the news flow, we have significant headlines moving markets right now. First, Iranian crypto outflows have spiked 700% following US-Israeli airstrikes, creating immediate liquidity shocks. Second, the US Senate housing bill includes a CBDC ban, creating regulatory overhang. Third, Bitcoin futures demand has fallen to 2024 lows, raising questions about institutional exit. CIPHER, how are you seeing these headlines impacting flow and positioning?
The headlines confirm a structural retreat from leveraged crypto exposure. Bitcoin futures demand collapsing to 2024 lows indicates institutional players are exiting or heavily hedging rather than accumulating spot exposure. Simultaneously, the 700% Iranian outflow is creating a liquidity vacuum. We are seeing massive geopolitical sell pressure absorbing bid depth. On the institutional side, the core scientific stock turned lower after disappointing Q4 results, suggesting mining equity valuations are reflecting the same fundamental stress as the network. The PayPay Group, which owns 40% of Binance Japan, is seeking up to $1.1 billion in a Nasdaq IPO, but that traditional finance liquidity event is currently being drowned out by the risk-off behavior and the flight to Bitcoin dominance.
Let's talk about Bitcoin. It is trading at 78,108, down 0.78%, with a 24-hour high of 79,540 and a low of 77,955. The price is holding steady, but the futures demand is at 2024 lows. Grid, what does the technical structure look like for Bitcoin right now?
Technically, Bitcoin is holding above the 78,000 mark, but the rising dominance of 59.16% combined with falling futures demand indicates a structural rotation away from speculative layers into this primary reserve asset. Bitcoin is down only 0.78% while the broader market is down significantly, which technically confirms a flight to quality despite the extreme fear regime. However, the lack of futures volume means the current price action is being driven by spot market mechanics rather than leveraged positioning. The 78,000 level is acting as a psychological floor, but without futures demand stabilizing, the technical setup is vulnerable to further squeeze.
SPECTER, you have flagged a divergence between the VIX and crypto sentiment. How does that impact Bitcoin's current structure?
The VIX is sitting at 15.85, indicating low traditional volatility, while crypto fear is at 14 out of 100. This decoupling suggests traditional equity complacency is masking severe crypto-specific stress. For Bitcoin, this means the current hold at 78,108 is not supported by broad market risk appetite. It is being propped up by capital fleeing higher beta assets. The low VIX is a false comfort blanket. When the VIX is low but crypto fear is extreme, the market is mispriced. The structural risk in crypto is not being reflected in the traditional volatility metrics, which often leads to a violent correction once the decoupling closes.
Moving to Ethereum. It is trading at 2,445.79, down 0.79%, with a 24-hour high of 2,484.35 and a low of 2,419.7. Ethereum dominance is at 11.15%. CIPHER, how is institutional positioning impacting Ethereum's flow?
Ethereum is caught in the same institutional disengagement we are seeing across the board. With Bitcoin futures demand at 2024 lows, the capital that would typically flow into Ethereum decentralized finance ecosystems or staking products is currently being withdrawn or hedged. The 82.16 billion in total volume shows broad distribution, meaning Ethereum is facing systemic liquidity withdrawal rather than isolated profit-taking. The lack of institutional leverage in the futures market is leaving Ethereum spot prices exposed to the same sell-side pressure driving the broader market down.
Pulse, is there any sentiment shift specifically around Ethereum that differs from the broader market? Not currently. The 12-7-day trend in the Fear and Greed Index applies across the board. Ethereum is suffering from the same sustained sentiment breakdown. The 700% Iranian outflow spike is overriding any fundamental tokenization narratives. Until the geopolitical liquidity shock is absorbed, Ethereum sentiment remains heavily bearish, mirroring the broader 14 out of 100 extreme fear reading. Let's look at XRP. It is down 4.49% to 1.39, with a 24-hour high of 1.48 and a low of 1.4. It is one of the top movers today, facing regulatory headwinds. Grid, map the technical breakdown for XRP.
XRP has declined 4.49% to 1.39, breaking immediate psychological support. This breakdown is trailing the broader market decline, signaling heightened sensitivity to regulatory overhang. The 1.39 level is currently acting as a fragile intraday support zone, with APT down 5.46% and XLM down 4.43%. XRP is part of a broader high beta erosion where Layer 1 infrastructure support levels are being tested. The technical setup favors continued downside pressure until volume exhaustion signals appear at this level.
SPECTER, you mentioned the CBDC ban in the Senate housing bill. How does that regulatory news impact XRP's current technical structure?
The Senate housing bill, including a CBDC ban, creates immediate regulatory uncertainty for XRP and other cross-border payment assets. While some might argue this is a long-term bullish catalyst for decentralized alternatives, the immediate impact is negative. The 4.49% drop in XRP reflects this short-term pain. The regulatory overhang is compounding the systemic liquidity drain. We cannot ignore the 700% geopolitical outflow spike when analyzing XRP. The regulatory noise is secondary to the current lack of bid-side liquidity. The technical breakdown at 1.39 is driven by risk-off flows, not just CBDC headlines.
Turning to Dogecoin, it is trading at 0.0858, down 3.91%, with a 24-hour high of 0.089343 and a low of 0.085274. Dogecoin is acting as a meme coin liquidation proxy today. Grid, what does the volume profile look like for Dogecoin?
Dogecoin is trading at 0.0858, a level that historically coincides with high liquidation density for meme coin proxies. The 3.91% drop is occurring on a total volume of 82.16 billion, with nearly 19,000 cryptocurrencies in red, which technically confirms a systemic liquidity drain rather than a temporary oversold condition. The 0.085 level is critical. Without a reversal in Bitcoin futures demand from its 2024 lows, Dogecoin lacks the technical volume support to stage a sustainable bounce. The high beta erosion we are seeing in APT and XLM is extending to meme assets.
CIPHER, is there any flow data suggesting institutional interest in Dogecoin at these levels?
None. The institutional disengagement we are tracking via the 2024 lows in Bitcoin futures demand is directly impacting speculative assets like Dogecoin. When institutional capital retreats from leveraged crypto exposure, meme coins are the first to lose bid depth. The 700% Iranian outflow is creating sell-side pressure that is absorbing any retail bids at the 0.085 level. There is no structural flow supporting Dogecoin right now. It is purely a liquidity vacuum play.
Finally, let's look at BNB. It is the only major asset in positive territory, trading at 698.58, up 0.44%, with a 24-hour high of 707.25 and a low of 689.42. Pulse, why is BNB decoupling from the extreme fear regime? BNB is showing exchange token resilience or specific ecosystem support that is insulating it from the broader 700% outflow shock. While the 14 out of 100 fear and greed index is dragging down altcoins, BNB's positive performance suggests capital is rotating into exchange-adjacent assets as a defensive measure. It is not a sign of broad market recovery, but rather a concentrated flight to a specific liquidity hub. The 0.44% gain is a stark contrast to the 5.46% drop in APT, highlighting the selective nature of this risk-off rotation. SPECTER, does BNB's outperformance mask any broader risk?
It masks the severity of the structural liquidity vacuum. BNB's resilience is an anomaly in a market where the VIX is 15.85 and crypto fear is 14 out of 100. The fact that only one major asset is green while the rest of the market is down 3.72% indicates that BNB's performance is not a sign of strength, but a symptom of capital concentration. When the broader market is this weak, isolated outperformance is often a trap. The low VIX combined with BNB's green status suggests traditional market complacency is failing to translate into digital asset stability.
Apex, synthesize the key takeaways from this pre-market session. Grid flagged XRP's technical breakdown and Dogecoin's liquidation density. CIPHER showed institutional disengagement via low futures demand, and SPECTER highlighted the VIX decoupling. How do these pieces connect?
The market is trapped in a structural disconnect. Grid observation of XRP breaking 1.39 and Dogecoin facing high liquidation density confirms that high beta assets are being squeezed due to the 700% Iranian outflow shark. CIPHER data on Bitcoin futures demand falling to 2024 lows explains why there is no institutional bid to absorb that sell pressure. SPECTER VIX divergence shows that traditional market complacency is not providing a floor for crypto. The result is a broad-based capitulation where capital is fleeing to Bitcoin dominance, but even Bitcoin is struggling to hold gains without futures support. The key battlegrounds are Chainlink at 11.32 and XRP at 1.39, where regulatory fear and tokenization narratives are colliding with a liquidity vacuum.
To summarize today's pre-market analysis, Bitcoin is holding at 78,108, but facing structural headwinds from low futures demand. XRP is breaking technical support at 1.39 amid regulatory overhang. Dogecoin is facing high liquidation density at 0.0858. The Fear and Greed Index is at 14 out of 100, driven by geopolitical outflows and institutional disengagement. Tomorrow, we will monitor the GDP release and the continuation of the 700% Iranian outflow impact on regional liquidity. This is ShadowQuant Crypto Edition. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.